Australia's stock market has suffered a big fall today as China's lockdown is extended, sending the price of iron ore, coal and oil down on world markets. Our business editor Ross Greenwood is with me. Following the markets, Ross, what's the latest?
Well, the latest is that the market is still well down, notwithstanding the fact that Chinese markets have opened higher today. But largely, Australia's market is picking up on what happened yesterday, and in particular, those big falls in commodity prices that you spoke about. So as we speak, the S&P ASX 200, you can see here, is down 2% at the moment. So that's give or take $50 billion that's been wiped off the value of the market today. You can see there also that energy stocks are well down. So Beach Energy is one of those, down by 3.2%. But iron ore stocks are among those that have been most heavily hit today. And so you're looking at the likes of BHP and Rio Tinto, Fortescue, Champion Iron. All these types of stocks are down somewhere between 5 and 8%, as you can see here. Fortescue off by 6.75%. BHP, of course, the largest company on the market, does have a big influence on which way the overall direction of the market goes. So its shares down 5.4%, mean that probably in the past week or so, those shares are down close to 8%. But then you go to energy stocks. We mentioned one of those, Beach Energy, but you have a look at Woodside here, down 4.75%. You got Santos down 3.8%. So really, this is the reason why the overall market is down right now. And as I say, notwithstanding the fact that there's slightly brighter outlooks for the US markets tonight, but also the China stock market, even as it's open now and higher than what it was yesterday.
And Ross, what about this huge story? Elon Musk's incredible takeover of Twitter, $61 billion. What's the feeling about what he does with it?
Well, the point about what he does with it is really, where does he make money from it? Because do understand that other stocks in this sector have been smashed in the past year. So say, for example, Meta shares, the owner of Facebook, is down by 44% over the course of this past year. You've also got Google shares that are well down in the course of the past year. And that's because there are question marks about, A, the amount of advertising they're generating and their users. But just to put it in relative terms for people, just so you understand this, had Elon Musk, with his $61 billion, wanted to, he could have bought Fortescue Metals here in Australia, which is one of our biggest companies, or he could have bought either Wesfarmers or he could have bought Woolworths, and he would have had, in both cases, about $5 billion rather, in change. Then put it in reasonable terms here. He could have bought Coles, Santos and Qantas and still had change out of the money that he's paid for Twitter. So that puts it in relative terms, and considering, of course, that Twitter doesn't make any money at all, it's interesting to note. I do also make one observation to you. Tesla shares, he owns 17% of Tesla. He's financing those to get this. Has never, ever paid a dividend, and indeed he said it never will pay a dividend, and that's generally where shareholders get their money from.
Wow. Yeah, it is quite something, isn't it? Particularly when you put it in the context of our largest companies. Thank you, Ross. Appreciate it. We'll talk to you next hour.